Ladies and gentlemen, welcome to the Q3 FY21 results call of Berger Paints India Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Ashit Desai of Emkay Global. Thank you, and over to you.
Yeah, thanks, Rutuja. Good evening, everyone. It's a pleasure for us to host the management of Berger Paints after a strong Q3 show. From the management, we have Mr. Srijit Dasgupta, Director Finance and CFO, and Mr. Sujyoti Mukherjee, VP Finance and Accounts. I'll now hand over the call to Srijit for opening remarks. Over to you, Srijit.
Thank you, Ashit, and thank you for organizing the call as usual. Good afternoon, ladies and gentlemen. On behalf of Berger Paints India, I'd like to extend a warm welcome to all of you to the Q3 FY21 earnings call. I would like to begin this session with the usual brief commentary on the quarter performance, both standalone and consolidated. On the standalone front, the growths look like this. Total income from operations went up by 24%. PBDIT without the other income, which is operating income, went up by 45.1%. PBIT went up by 49.7%, PBT by 52.9%, and PAT by 53.2%. Going to the consolidated front, and I'll comment on each one separately. Going to the consolidated numbers, the growths look like this. Total income from operations at 24.9%. PBDIT without the other income, 40.1%. PBIT at 44%. PBT at 50.6%. This includes the share of profit and loss of JVs. And PAT 51.2%. Going back to standalone numbers and the performance for the quarter, a few brief comments may be in order. There was a healthy growth margin expansion, and by growth margin, gross margin, we mean sales minus RMC, raw material and container costs. The expansion happened mainly on account of decrease in the prices of solvent-based raw materials, though I might add that the prices are now rising and likely to create some pressure going forward on margins. However, the company's initiatives during the lockdown period in terms of renegotiating raw material contracts are now clearly bearing fruit, and we saw a significant impact of this in Q3 FY21. You might recall that in earlier calls we had mentioned that this initiative was happening. The beneficial effect of this renegotiation is likely to continue through Q4 FY21. The lockdown period also gave us the opportunity to take a relook at some formulations, and this also yielded some significant savings. Overheads were largely under control, and we consciously increased the level of advertising, media spends in particular, in Q3 FY21 to adequately support the opportunity that the unlocking of demand at the end of Q2 provided. New products and initiatives. I told you about the XP Safe training program that was very successful and well received by the market. This enabled painters to offer safe and hygienic painting services. This, to a large extent, helped households and consumers go back to painting their houses with a greater degree of confidence. There was a robust growth in construction chemical products, Berger's waterproofing products, For example, the Home Shield Damp Shield Elasto version performed very well during the quarter. Q3 FY21 also saw a recovery in terms of demand in many of the metro cities, as opposed to Q2, where they were still recovering and in the process of coming out of lockdown. Metro and Tier 1 towns showed a significant recovery as compared to the earlier 2 quarters. Of course, the growth in Tier 3 and Tier 4 towns was sustained. But the numbers overall look much better because of the improved performance of the larger towns and cities. The automotive sector also recovered during the quarter. That's the good news from the industrial paints front. You know the numbers of production, manufacturer or category-wise. Passenger vehicles did very well. Commercial vehicles have also improved. Three-wheelers have been lagging behind a bit. But all in all, good news from the automotive front. On the consolidated numbers, a few words perhaps on the subsidiaries. BJN Nepal, that's the subsidiary in Nepal, showed significant improvement in this quarter after a protracted off and on lockdown situation. If you recall, they had multiple lockdowns happening in the valley and elsewhere, and this did affect performance and normal business for the first 2 quarters. Talking about Bolix Poland, the company's operations and its subsidiary in the UK showed improved performance in both top line and operating profits. I had mentioned that UK was a new venture relatively, and this is now bearing fruit. We were a little bit hamstrung by the lockdown situation in UK. UK, as you all know, was very badly affected, but Q3 was good for us. SBL Specialty Coatings Private Limited, this is the erstwhile Sabu Coatings, also showed improved performance with healthy top line and PBDIT growth, as did STP, the latest acquisition that Berger had made. This was, of course, in November 2019, the acquisition was made. A little bit of explanation regarding the Russian operation, that's BPOL Russia. We are based in South Russia in Krasnodar. The top line was, of course, affected by the lockdown and consequent impact on markets. Russia has been hit a little harder than other European countries, and this is reflected in the top line as well. There was also a significant mark-to-market loss, which was recognized in the quarter on account of the dollar-denominated loan exposure in the subsidiary, and this affected the overall consolidated profitability. This is reported under expenses. There was a mark-to-market gain taken in Q2 FY21 on account of the same foreign exchange fluctuation. So there's a bit of up and down which goes on. I think going forward, the ruble has remained relatively steady versus the USD, so hopefully no further shocks. But I thought this needed explanation, and therefore the comment on the mark-to-market fluctuation. Just a word here that the BPOL Russia numbers are consolidated in our Q3 results. Their Q3 corresponds to the July to September quarter, and this is consolidated in our Q3 numbers. So we pretty much know how the ruble has behaved going up to December. Maybe even today it's also fairly stable, little improved from December. Berger, Becker and BNPAC showed improved performances during the quarter. BNPAC in particular had a strong top line growth. Of course, on the back of increased demand from automotive OEs, passenger vehicles in particular. So all in all, subsidiaries have obtained, barring the mark-to-market loss in Russia. So this is a little bit about the quarter performance. I will now invite questions from the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Congrats on a very good set of numbers. My first question is, you must have heard of the large corporate player in white cement putty announcing 5,000 crores. They want to be a strong number 2, which you are currently there. So my question is, do you see your market share long-term structurally getting at some risk from this player? Second, from a tinting machine, is it possible to have this innovation wherein you don't put tinting machine in that shop, but you put it at strategic locations within the city? So have you tried, or any feedback you have whether that works or not?
Thanks, Avnish. Very relevant questions. Yes, we are viewing the recent announcements regarding the entry of this major cement player with great amount of interest. As I recall, they've mentioned also a little bit about backward integration. They've talked about the network of cement dealers. So yes, we are viewing this with a lot of interest. But be assured that we will do everything that is necessary to protect our interests as well, keep our dealers motivated, expand the network as much as we can. Yes, people have come into the industry over the last few years, and this is bound to happen. It is an industry which is seen to be relatively stable, so I think will attract new investors. Yes, we are preparing our own game plan, of course, to respond to the challenges as and when they happen. We are not unduly concerned about this at the moment, but of course we will keep a close watch. Regarding the second question, where you said that is there a possibility of reaching the consumer without placing the tinting machines in the dealer's premises. I think one of the recent entrants has tried this model. This seems to be a model which is possible in the West. For example, our operations in Poland, where we also sell a bit of paint now, some shades are factory manufactured, but there the distances are small. The demand is also not polarized towards festivals and occasions and marriage events, and it is perhaps more easy to kind of service the consumers through a more distant tinting route. Tinting machines at dealers is the preferred route now because of speed and response times. They have mentioned about an alternative strategy. We will await this with interest.
Sure, that's very helpful. Just one more. So in terms of distribution, cement players have this advantage versus, say, new paint players. The existing cement players will have, say, access to 70% of the paint shop. The question is, those are not direct relationships. Those are mostly through wholesale. So my question is this a big advantage for cement players versus a new paint player entering India?
It is, for sure. It is certainly an advantage. By how much is what we have to see. There is a clear presence of cement players in hardware stores, for example. And therefore, we will view this with all interest and caution.
Sure. That's very helpful. My last question is, you have done exceedingly well. So one part of the question is, when you compare with the market leader, on a standalone basis, he seems to have grown 2% faster on sales and around 8-10% faster on the profit. So any comment? Second, in most of the businesses you have done well, but economy is recovering. When you see the broader car market or industrial market, any segment where you think you could have done better in this quarter? I am not saying this from a philosophical point of view. Every company will say we would have loved to do better, but more from a relative basis, where did you do better, where you did not do as good as, say, the number one player there?
Okay. Talking about how we stacked up against the market leader, it's just conjecture on my part, really. I don't want to spend too much time on that. But I would tend to believe that, the competitions, the major competitors' performance was affected by the relative late recovery of the metro cities where we are less, let's say, powerful compared to them. So that's possibly one of the explanations. And I'm talking of, say, the Mumbais and the Bangalores and the Ahmedabads and the Hyderabad, etc. So that's possibly one explanation. The second comment that I would like to make is we should compare like for like, and therefore our deco business with their standalone numbers, essentially it's largely paint, I mean, as you know, in their case. So our deco numbers are actually not so far away from this in terms of comparison. Certainly better than our standalone growth numbers. So I offer that as an explanation, but really I can't be very precise and clear. I hope this is helpful. Regarding where we could have done better, perhaps we were a little disappointed by the protective coatings numbers. We look forward to definitely a better performance going forward. There have been announcements made in the finance bill and the finance ministers made some very, very encouraging comments regarding infrastructure investment. So that gives us hope that we will do also better in protective coatings.
So more of a macro issue.
Yes. I don't think we can complain that we've done badly in any particular segment.
Okay, sir. That's all from my side. Thanks a lot.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, thanks for the opportunity and congrats on good set of numbers. So the demand recovery in paint segment has been sharpest among all the consumption categories that we cover or we track. Now, would you still attribute this to pent-up demand or there is a now visible uptick in organic demand cycle, especially after the buzz of real estate cycle recovery is spreading around?
I think a bit of both, Tejas, meaning there must have been some element of pent-up demand, certainly in the metro and tier 1 cities in Q3. So I think it's a mixture of that and, as you say, a little bit of demand coming back and the pre-COVID situation kind of springing back. So a little bit of real estate, little bit of optimism and let's say encouragement in the markets, which is also happening. But clearly a little bit of pent-up demand in the larger towns and cities as well.
But and then let's say in tier 2, tier 3, where the impact of COVID was not that large, at least from demand perspective, are you seeing demand momentum sustaining there as well in 3Q?
Yes, we are.
Okay. So second on competitive landscape, and you gave a very detailed answer on demand impact of the same, and perhaps it's early to gauge that right away. But considering the talent pool of the industry is limited, it has been oligopoly for long. Are you facing any early pressure in terms of retaining talent or getting new talent to support your growth ambitions? So there's another dimension to the whole competitive perspective.
Pressure will always be there, Tejas. This is a question that's been asked many times. But we have a constant program of taking fresh talent from the best places that we can afford. And rest assured that we won't let up on this front at all.
And so lastly, as an industry or as a sector, we have always taken pride in the kind of moat or the kind of entry barriers that the incumbents have created or enjoyed for long. And even foreign competitors were not able to break that. Now, with the flux of domestic competition which has come up in last 5-6 years, and now with the latest announcement, how do you see the competitive landscape from incumbents' entry barrier perspective, A? And B, do you think that a lot of these barriers can be overcome by spending more capital rather than time in the industry?
I think one has to react to the challenges as and when they happen, Tejas, and for sure, every established player in the industry today is spending time thinking up strategies to put in place, not so much as a reaction, but as a continuous improvement process. So every effort on backward integration, on improving or widening the network and reach, all of that is happening. And I don't think Berger is an exception. Everybody in the industry will not sit and take it lying down or kind of remain static. So those initiatives will continue and perhaps escalate, and nothing prevents us from implementing strategies which we think would be helpful in sustaining our growth numbers and our place in the industry. So clearly that is there.
Last one on this. Do you see a possibility of consolidation happening in the industry, because it has not happened for long now among the incumbents?
Can't really comment on this one, but unlikely at the moment. Unlikely. There's just too many things happening and too much potential for each major player. I can't talk about the smaller players, of course. Some amount of shakedown may happen, so that's possible. But certainly difficult. It looks difficult for the established players. But one never knows. I think there is always a learning curve and a fresh opportunity at every step and turn. So let's see.
Sure. That's very helpful, sir. And all the best. Thanks.
Thank you.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, Srijit and Sujati. Thanks a lot for taking my question. I had 3 questions. First, I wanted to kind of just look at the other expenses. Now, at the start of the call, you highlighted towards investments in marketing that you had done, given the negotiation, the benefit of the negotiations. Would it be fair to say that this is primarily the reason for the sharp increase in other expenses, or is there anything else that is?
By and large, some of our contract work went up, and you know that the accounting standards require that the contracts on a supply-apply basis means that the top line includes the labor component and the other expenses reflect the labor payments or the labor charges. So to that extent, it's a little vitiated, but this is of normal business. And that's the reason why perhaps it may be a little higher than other quarters. But the true explanation is really the investment in marketing and advertising spends.
And did I hear you correctly that because you would kind of retain, because obviously these are more these negotiation benefits should continue, would you kind of also retain the marketing aggression, or how should I look at that line item as well as we go forward?
I can't talk about future quarters, Avi, but I would say that yes, we have made up a little bit some of the lag that happened in Q1 and Q2. Q1, at least we didn't spend a whole lot on advertising, as you could appreciate. So some of that has been unwound and come through. So maybe a little bit of tapering off going forward, but I can't be more specific than that. Thanks.
Okay, let me rephrase it. So is this momentum or pickup in marketing across the industry, or have we spent ahead of the industry? Is our share of voice up?
My take is, for the quarter, certainly we've spent ahead of industry, but that's only my take. I'm not privy to the exact numbers.
Fair enough, sir. So the second bit, I just wanted to kind of just check you. From what we understand, we have launched, bathroom cleaners or kitchen cleaners related products as well. I'm not sure if my understanding is correct, or is this primarily only online? So if you could kind of just comment your thought process over here. What is the plan? And
you're very right. I think the challenge is in distribution. So we are looking at all the various avenues for distribution, but because these are slightly different from the usual paint type of outlets. So yes, we are working on that. Whatever could be sold through the paint network is being done, but you're right. The challenge lies in widening the distribution, and we are working on that.
So is this more a tactical foray, or you're looking to kind of invest in a brand, Breathe Easy as a brand in this kitchen cleaner segment? If you could, what exactly is?
We'll get diverted much from our core paint competences. This is an opportunity that came through during the lockdown and COVID period. So we will milk it for what we can, but we won't take our eye off the paintball, so to speak.
And are you looking to invest more in the digital channel for selling of paints as well, or is that?
It is certainly higher. It is certainly higher, yes, but not significantly higher.
Okay, sir. Okay. Perfect, sir. I'll come back in the further question. Thank you very much, sir.
Sure.
Thank you. The next question is from the line of Shirish Patesi from Centrum Capital. Please go ahead.
Yeah, hi Srijit and team. Good afternoon. Good evening, in fact. And congratulations for a good set of numbers. In fact, my part of answer has been asked by the previous participants. So I think you have just interacted saying that this is a tactical opportunity. But what I'm looking from a medium to long-term perspective, what are the things which we can look at? I mean, is it a trial? Is it a pilot? Or is it that we would be seriously playing into the kitchen cleaning and more products to support our presence in the market? Because the channels are a little different.
I think the philosophy has been, as with paint, differentiate our product and give something new to the market, and rely more on the attributes, the product attributes, rather than on a very fierce and aggressive branding campaign. I think that's been our philosophy in paint as well, and has worked pretty well, hopefully, in paint for us. So whenever we've introduced a product, and I can talk about the Safe 24 surface cleaning product, for example, it is differentiated. It is very effective and accredited by very, very reputed institutes and labs. And hopefully the consumer appreciates or will appreciate this. The challenge, I think, as I mentioned earlier, is how to get it to the market and to reach the consumer, because consumer is not looking for a hygiene product in a paint store, really. So that's where we are at, and we have the products, and the products are good, is my belief.
Yeah, exactly. That's the point which I was trying to elaborate, saying that then if you have to look at the different channel, cleaning is one of the fastest picking opportunity, but would you substantially introduce more products to keep a basket, because you're trying to reinvent the different channel in terms of general trade and grocery?
Yeah, there is always going to be a demand through our painters and our network, because that's how consumers will feel safe if they have a good product that's being used by the painter or used in their home. So there's let's say a seed demand which is already there and being usefully utilized. But the larger play, of course, we will let's give it a couple of quarters. It will need a little time to expand this.
Sure. My second question is on, if I look back last 4-5 quarters, and when we look at this year, first 2 quarters, there was a slow demand recovery, and then we are seeing pent-up demand which has happened. What I'm trying to understand, I mean, you and market leader has really shown a tremendous volume growth, but the sense which we are getting while speaking to channel partners, there is a whole set of down trading or value for money which is happening. So basically, on the one side, you can say that the rural is moving up the ladder from putty distemper to low-end emulsions and enamels. But on the other side, the urban markets also, there is a issue, and people are trying to look at the economy emulsion. So in your sense or your part of business, do you actually see that this is a strategic change in behavior which is either tactical or will remain longer time, and therefore we need to focus more product basket because the color choices and preferences are vast different in the urban and rural market and in terms of metros also?
Yes, you're right. But, we've only had one very good quarter. And, of course, as I explained in my initial remarks, it was a combination of pent-up demand in Tier 1 and metro towns, as well as certainly sustained demand in Tier 2, Tier 3, and Tier 4 towns. So Q3 it's a little early to speak, but we are encouraged by the sustained demand in Tier 2 and Tier 3 towns. Q3 was helped to that extent by the recovery in Tier 1 and metro cities, and that's kind of probably behind the good numbers that you spoke of in the industry. So that's there. Q4 and Q1 will be again difficult to talk about, and I mean Q4 of FY21 and Q1 of FY22, because the base numbers will be quite low and difficult to kind of read really into any kind of make any sense of what the growth numbers could look like going forward. But I think we are optimistic that there is demand recovery, perhaps a little bit beyond pre-COVID levels, which encourages us.
Sorry, Sridhar, I'm little stressing more. What I could not understand, and when I look at 5 quarters, the rural is one of the part, and even market leader has been very gung-ho about rural recovery. So fundamentally, in your experience, what's exactly happening this volume growth, which is driven by consumer? Is that there is a money, or is there the sentiment? Is that the affordability which is driving? What exactly happening and behind this volume growth?
A combination of everything, I think, including expansion of the network. We are now reaching out to the smaller towns and making our paints available. And this is a result of urbanization. This is a result of consumerism, result of advertising, making our products known. Paint is now a lifestyle product as opposed to a commodity, I think. So a combination of everything, and some optimism coming out of a very bad COVID period.
Okay. My just last question, I just wanted to understand. Now we have seen the raw material prices inching up, and I think one of the things which is more talked about, paint industry is resilient. When the benefit comes, you can take the price increases. Do you think you have exercised any price changes in this quarter or recently, or if the competition has done this?
We will probably have to look at price increases in industrial, where its margins, as you know, are lower, and it's more cost push driven negotiation rather than elasticity or inelasticity of prices as far as deco is concerned. But the price increases have not yet been so dramatic to merit an instant reaction. Let's wait and watch for a little while. I think some prices have started stabilizing as well after the initial swing upwards. So let's see. I think we'll need a quarter or two to figure this one out.
So if I understand, there is no change in prices which has happened in deco part of the business.
Not as yet, no.
Okay. Thank you, Srijit, and all the best.
Thank you.
Thank you. The next question is from the line of Aditya Gupta from Goldman Sachs. Please go ahead.
Hi, good evening. Just one question on the competitive landscape going forward. So in a hypothetical scenario where the new entrant executes well and if, let's say, it's sort of successful a year, 2 years down the line, and is disruptive on pricing, again, in a hypothetical scenario, then how do you look at the margin versus market share equation for you and the industry going forward?
See, there are too many, as you very rightly mentioned, there are too many hypotheses in that model. A lot of things, we don't know how things will pan out. But I think we have confidence in our strategies of always introducing value-added products, and so we will hopefully command our own margins and not be driven by competition pressure. Yes, at the entry level there will be some pressure, but that's there anyway. It's not really something which will happen or start with the entry of any one particular entrant. So I think we have confidence in our ability to innovate, introduce new products, introduce new services, and therefore demand our margin and give value for money to the consumer. That's been our philosophy. I think we will do well to stick with it.
Got it. Just a follow-up. So, I mean, if we look at the decorative part of the business, the organized industry is basically between, let's say, 3 to 5 larger players, and actually speaking 3. And now, because then there's a change, it's not like a small marginal or regional player coming in. If they are national and there is some, let's say, higher dealer incentives, higher media spend, etc., then let's say the question here is, would you go after your market share, protecting your market share, or try and maintain your margins?
I think the idea is that it has to be both. I mean, market share without margins is not sustainable going forward. So it has to be hopefully a prudent mixture of both. But as I mentioned, that the idea is to be able to bring innovation and demand our margins through innovation and value for money, rather than be fighting tooth and nail on the pricing front.
Got it. Super helpful. Thank you, and have a good day.
Thank you.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah. Hello, sir. Good afternoon. So just 2 questions. Update on the UP plant. So the further progress on that, production, etc. And second question, if we have to maintain the margins, that is in FY20, if we have to maintain the same margins, how much price hike we will be required to take? Means we may not take the price hike, but how much price hikes will be hypothetically required to maintain same margins?
I'll answer the first question. I think that's easier for me. Sandila, the plans are in fact brought forward a little bit because of the demand scenario. So we have actually accelerated our efforts to finish the completion of or to achieve the completion of the project a little ahead of what was originally planned. So good news on that front. Everything is going smoothly and actually being brought forward a little bit in terms of timelines. We will probably also spend a little more than we originally intended to kind of meet the demand scenario. Regarding margins and going forward and what price increases we need, I think I mentioned in the last participant's query in answer to that, I said that, look, it'll need a quarter or two to find out how RMs raw materials are currently stabilizing after an initial spike upwards. So let's see. I think it may not prompt an instant reaction, but let's wait a quarter and see what's happening. For sure, if the prices go up beyond a certain point, we will have to take a look at decorative price increases. I did mention that we are in the process of renegotiating some industrial price contracts, so that's there already.
Okay, sure. So, UP plant, when can we expect the commercial production to really start?
We are looking at early calendar year FY22. So let's see. We're keeping our fingers crossed. So hopefully in just over a year's time, it will be ready to, at least for the initial production. It may not be the significant amounts that will need a little bit more time to stabilize, but the plant should be ready in a little over a year's time.
Okay, sir. What is the capacity at the plant and capex? That's it from my side.
Yes. So capex numbers I will only share in the Q4 call. I think we mentioned certain numbers when we did the earlier calls. We will only up the spend a little bit. We'll come forward with harder numbers in the Q4 call. I would like you to just bear with us till then. Things are still a little bit fluid in terms of demand, and we'll be able to give you firmer numbers at the end of the year. And regarding the capacity, it's a modular plant, so initially we will start with about 300,000 roughly, but scalable upwards.
Okay, sure, sir. Thank you.
Thank you. The next question is from the line of Mihir Shah from Nomura. Please go ahead.
Hi, Mr. Das Gupta, and congrats for a stellar performance. If you could shed some light on the demand growth across the months in 3Q. Was it very bunched up, very high, or bunched up near the festive period? And post-festive period, we've seen some moderation meaningfully. Of course, there'll be some moderation versus the festive, but any meaningful moderation? Was it similar across the months? If you could shed some light on that, please.
I can only talk about Q3. Unfortunately, talking about subsequent period is beyond the scope. But I think it's, as I mentioned in answer to the queries of earlier participants made earlier, the Q3 performance is a combination of pent-up demand in Tier 1 and metro cities, and I'm talking of deco or architectural coatings. Combination of the Tier 1 metro recovery as well as the sustained demand in the smaller towns, Tier 2, Tier 3 and Tier 4. Of course, festive, the late Diwali also helped, so I'm sure you would have factored that in terms of, and that's a nuisance that always happens with the shift in dates from year to year, and when you compare with the base year, you have to make those normalizations. I won't go into those things right now, but just enough to mention that yes, a late Diwali helped. But we do see strong demand even in the...
Hello?
Sorry to interrupt. The line of the management got disconnected. Please give us a moment while we reconnect them.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे. कृपया लाईनवरच राहा. The person you are speaking with has put your call on hold. Please stay on the line. आप जिस
Ladies and gentlemen, thank you for patiently holding your line. The line of management is reconnected. Thank you, and over to you, sir.
Thank you. I'm sorry about that little outage, but please go ahead. I don't know whether the last part of my answer was audible.
Yeah, Mr. Dasgupta, so I just wanted to check with you, during the months in 3Q, was the demand very high in the earlier part of the month and then moderated meaningfully, as the quarter ended? Or was it kind of similar across, as in, you are seeing this pent-up continuing, is what I was looking for, actually.
Sorry to interrupt, Mr. Shah, again, but the management line has been disconnected.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे.
Please be online while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently holding your line. We have the management line reconnected back in the conference. Thank you, and over to you.
Yeah, sorry about that. Please go ahead.
Yeah, hi, Mr. Dasgupta. I'm not sure if you could hear my question earlier. I'm just repeating it, for the sake of good order. During the quarter of 3Q, I wanted to check with you if the demand that was very high in the earlier part of the quarter, extremely high, led by festive and pent-up, and then moderated meaningfully as we ended the quarter. If you could just, shed some light on that.
Yes. So in answer to that, I had said that, yes, you're right. The festival period did affect. Also, the entry of the metro and tier 1 cities did push up the demand in the earlier part of the quarter. But it was largely sustained because the tier 2, tier 3 and tier 4 towns continued to have a very strong performance. So it's not as if everything was skewed heavily into October or early part of November, to answer your question.
Understood. That's very clear. Thank you. So just also one more clarification on the volume value growth differential that we have been witnessing in all these quarters. Would it be the same in this quarter at about 8%, or would have it increased because high demand from low cost space would have seen during the festive season?
A bit of both, I think. So the economy end has done very well, but so has the premium or the mid-premium segment. So I think it's basically evened out a little bit.
So the volume value growth differential would have not expanded much. It would have been similar to what we...
Yes, at the same levels. Yes, you're right.
Understood. Got it. Okay. Thanks for that. And I think the other questions have been answered. Thank you so much.
Thanks.
Thank you. The next question is from the line of Anshuman Atri from Premji Invest. Please go ahead.
Yeah, hi sir, good evening. My question is regarding, just want to understand some basics on the impact of capex and brand versus sales. So suppose, for example, a player talks about a 5,000 crore investment. Tomorrow, if Berger puts a 1,000 crore investment, will it realize the sales in the next 2-3 years, or is there enough market to absorb such kind of capacity?
If we knew that and we believed that, we would have done it already, I think. No, that's I mean, jokes apart. Yes, you're right. Available capacity does have an impact, but usually at the lower end of the market, I think one can't control the more premium or mid-level brands through just supply. It's a combination of branding and the aspirations and wants of consumers. So yes, we are watching this news of intended expansion and investment very closely. We will respond as we feel necessary.
Do you think the industry existing participants, the incumbents will have to ramp up their capex, or will it be something else, some other strategies?
I think the demand is not driven by any particular entrant. I think the overall demand has to increase. The question is, how well do we preserve our market share and what strategies we have in place? So that's more important in my view. But yes, everybody is expanding. As you know, we have made our intent to start a new plant in UP very early. We've done the initial processes, and the plant should be up and ready in over a year's time. So but that would happen anyway. It did not require that announcement of an entrant would be necessary to take this decision.
Okay. And sir, if you see the government spends on rural, the budget on the housing as well as schemes like Berger will come down as per the latest budget. Do you think this can impact the rural demand?
For sure it will. Real estate sector for paint has been unfortunately in the doldrums for a long time, though low income and middle income group housing has improved a little bit. So yes, this is positive news.
Okay, and lastly, this year, how much market share would the organized gain from unorganized during the pandemic, given that the restarts of organized was much faster than that of unorganized?
I wish I could answer that question. I think certainly they would have been affected to some extent, and I mean the smaller players or the what you refer to as unorganized. But I can't tell you by how much, unfortunately. There would be some impact for sure.
Okay. Thank you, sir.
Thanks.
Thank you. The next question is from the line of Ashit Desai from Emkay Global Financial Services. Please go ahead.
Yeah, hi, Srijit. Talk upon how dealer schemes or incentives have trended in the recent quarters, given that RM prices have hardened and demand has also picked up.
You're talking about the dealer numbers? I didn't get the question. There was a bit of an interruption.
Yeah, I'm talking about the dealer schemes incentives or the discounts that you give it to trade.
Yes. You mean whether...
Is there any reduction in that?
Pretty much the same really, Ashit. No, not much difference. Pretty much at the same level as earlier quarters.
Okay. Okay. And second bit was just on what's your capacity utilization currently, and are there any tax benefits for the UP plant?
Yes, I'll answer the second question first. Yes, there are tax benefits essentially on the SGST component of within the state or intrastate sales. That's pretty much offered by many states. So there is a very, very generous reimbursement which is based on the SGST component, up to 200% of the capital investment over a period of time, of course. So that's a positive. And of course, we are limited to the fact that or by the amount that we would actually sell within Uttar Pradesh. So that's the limiting factor. But over a period of time, it would be a healthy recovery in terms of capital investment, we feel. So that's really a positive for us.
Okay. And how much are we investing in UP?
As it looks, upwards of 500 crores, so probably stretched over 2 or 3 years, depending on how quickly demand is. And of course, as I mentioned earlier, it's a modular plant, so stepping up the capacity will not be very difficult.
Got it. Thanks a lot and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you all for the interest and encouragement that you have provided, as like before. And as usual, we will be evaluating all options to see that we bring value to all our investors going forward as things normalize and the pandemic situation, slightly eases out. Wish to see you with, better operating results in the next few quarters. Thank you so much.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.